the custom, let's shift focus and hear from the management itself. I earlier spoke to Sharad Mahendra, who is the joint MD and CEO of JSW Energy, who, well, laid out the company's capacity utilization plans and the road ahead. Listen in.
If we talk of our current capacity as we are talking, the total operational capacity is close to 7.7 gigawatt, and out of which only about 47% is the thermal. Right. It is more than 50%, half of the capacity is in the renewable energy space, including the hydro as well as the solar and wind capacity.
Right.
And maybe as we have already informed earlier also, by the end of the current fiscal, by March 25, we will be reaching a capacity of 10 gigawatt with more than 60% of the capacity in the renewable space, and slightly under 40% will be the thermal.
Right.
So our focus in last few years has been to increase our share in the renewable energy space.
Right.
And we have been moving in that direction. And beyond 10 gigawatt, as you asked for, we have an order pipeline of in excess of 9 gigawatt, and which is 100% renewable. Right. So we are on track of 9.2 gigawatt capacity addition beyond 10 gigawatt, and out of that 9.2, slightly under the 6 gigawatt, we have already signed the power purchase agreements with the utilities, and which are to be executed in 18 to 24 months timeline as per the PPA terms.
Right.
So that is the timelines we see for next 2 years from 10 gigawatt beyond March 25 to add another 5 to 6 gigawatt of capacity, taking us in maybe close to 16 gigawatt of total capacity in maybe 24 years from March 25.
Sure. Mr. Mahendra, you spoke about the addition in the renewable space as well, but will most of it be towards solar, or and how much of an extent will wind and perhaps some of the others will contribute?
See, change in the trend, if we see the bidding space in the current year in first half or first 8 months, 9 months of the current fiscal, what we have seen is till last year we have been seeing majority of the bids coming in the plain vanilla solar or plain vanilla wind.
Right.
But this year there has been a significant shift that the utilities, the DISCOMs, the various states, they are looking for not just a power supply, but a solution-based supply.
Right.
Which is a mix. They came with first hybrid, which is a wind plus solar hybrids. Then it transformed to RTC renewable,
right,
which is a certain maybe meeting 60%, 70% of the requirement on round-the-clock basis, which was coupled with wind plus solar plus battery energy storage.
Right.
And now seeing that the solar power addition which is happening, there is a sufficient availability which is happening during the daytime, but evening peak shortage is increasing.
Right.
During the peak hours. So this year we are seeing solar plus battery energy storage with discharge during the off-solar hours during the evening peak to take care of that demand deficit.
Sure.
So these are the various customized solutions, and also the FDRE, which is the firm dispatchable renewable energy on an hourly basis, based on the patterns of different states and utilities.
Right.
What is their usage pattern, depending on, like if we see states like Maharashtra or Tamil Nadu,
right,
if we compare it with states like maybe Bihar or Jharkhand, here industrialization and the manufacturing portion in the overall economy is significantly higher in Maharashtra and Tamil Nadu.
Right.
So their usage pattern as compared to states like Bihar, Jharkhand, where the manufacturing portion in the economy is significantly lower, it's very different on an hourly basis.
Absolutely, yes.
So there is a solution base. Each utility will have a different requirement on an hourly basis. So those kind of FDRE bids also have been coming.
Right.
So that is where we have been focusing more.
Right. Mr. Mahendra, that actually leads me to the next question around, firstly, demand. What do you envisage from the nation and all the geographies that you are present in? And secondly, we have a lot of newer investors tuning into the show. So I also perhaps wanted a better idea of how the pricing mechanism works in the kind of contracts that you sign here.
Yeah. See, first, when we talk of demand, like last 3 years, if we see the demand has been growing at year on year, maybe 7.5 to 9% growth. This year, we have seen slight moderation in terms of the demand growth. Like November figures have just come, which is 5.14% demand growth year on year in November.
Right.
But we see that we have to realize that first half of the year in the current year, H1 has been exceptional in terms of the elections and
Sure.
other things, which definitely in terms of the investments, always the capex also, the government spends also have been
Yes.
slightly lower in H1 as compared to last year.
Absolutely,
So,
yes.
but we are confident that the basic fundamentals remain strong for the country.
Right.
And this growth rate, the economy growth will be there.
Right.
And power plays a very significant role.
Right.
So, but yes, assuming that a conservative estimate of 6% demand growth only, I'm not talking of 7.5 or 9.5, what we have witnessed.
Right.
Which means in terms of energy requirement, what is the increased requirement year on year? If we say next 5 years, it will be a 6% year on year growth.
Sure.
Which is conservative in my estimate.
Right.
Which means the country needs close to about 25 gigawatt of fresh capacity every year.
Right.
Assuming 6 to 7 gigawatt or 8 gigawatt is coming from thermal.
Right.
So balance leftover is about say 16, 17 gigawatt, and wind and solar, if we say combined load factor of 30% only, not like
Right.
thermal, which is at 70, 75%, which means we need a 3 times the capacity of, even if we say 15 gigawatt. So 45 gigawatt of, 45 to 50 gigawatt of capacity addition is required in the
Right.
country.
Right.
And government also announced that 2 years back, that every year 50 gigawatt. And the first step last year was that the first time ever the bidding took place for 50 gigawatt.
Right.
And in the current year also H1 in excess of 22 gigawatt bidding has taken place.
Sure.
So we see that this is the area where the focus is going to be there for us. And as you asked for that number of players entering into this space, and also the tariffs I will say that have stabilized. If we see last 6 to 8 months, barring 5 paisa, 10 paisa here or
Right,
there
right.
from one bit to other.
Yes.
But I think the current levels of tariffs have stabilized.
Right.
And we feel that this is not going to change significantly.
Right.
Because the size of the cake is so big that anyone who comes, for everyone there is a space.
Absolutely.
So
right.
there is not going to be, we see that a bid war or anything to be unreasonable. What we witnessed, that famous Badla 2 rupees.
Right, right,
A
right.
few years back.
Yeah.
That is not going to be the scenario is what we feel. And that is how we are preparing ourselves. We have prepared ourselves. In addition to that, as I told just some time back, that solution-based supply.
Right.
So customized solution, that is where a lot of innovation, a lot of planning needs, a lot of engineering is required to
Right.
provide a solution which is best for the buyer.
Right.
So these are the areas we are focusing, and we are sure that the tariffs we feel will remain range bound only, not any significant change is what we see.
Right. Mr. Mahindra, keeping that in mind, and I was going through your cash flows as well, and your cash flows have improved, certainly have seen an improvement, but you do have a lot of capital expenditure which will come into play over the next few years.
Yes.
Based on that, I'm looking at your debt to equity ratio, which has come off to a certain extent for the quarter gone by, or rather the first half. But how does this play out now, considering your cash inflows, also the kind of debt levels at which you are currently,
Right.
and the capital expenditure that you put forward?
Yeah. See, when we see that at the current capacity levels, with the free cash which we are generating is in excess of 3,700 to 4,000 crores.
Right.
And also with reaching 10 gigawatt by March 25, the operational capacity, our free cash generation will further increase.
Right.
And also we know that this is a 3:1 debt equity business.
Right.
So if I have maybe 5,000 also only, so raising 15,000 is not at all a challenge.
Right.
So maybe 1.5 to $2 billion investment every year from the present cash flows is definitely not at all a challenge for us. So we feel, and also like the thermal assets, which give a lot of good returns, that also we can deploy in increasing our capacities in the renewable energy space.
Right. And, the kind of capital expenditure that you have earmarked over the next maybe 2 or 3 years,
Yeah.
does that start to moderate after maybe 2 years down the line? Does it come off quite a bit because by then you have put in enough capacity? Or does that mean that it's going to potentially increase because you envisage a lot more demand to come through?
Yes, we see that the country, we all know that the 500 gigawatt of renewable energy by 2030, what
Yeah.
the government of India has already announced, and that is on track, maybe a few gigawatt here or there. It is moving fast in that direction, and we see this as a huge opportunity.
Right.
And about 2.5 years back, when we announced our strategy 2.0 of reaching 20 gigawatt by 2030,
Yeah.
and in the phase 1, 10 gigawatt by FY25. We are well on track of reaching 10 gigawatt as the phase 1 by end of the current fiscal.
Right.
So, and with the order pipeline of 9.2 gigawatt which we have, out of which more than 2/3 of the PPA is also signed.
Sure.
So we are quite confident that this 20 gigawatt which we had said earlier by 2030 will be happening significantly earlier.
Right.
So to accelerate this growth, maybe you may recall that in April of the current fiscal, we had raised a QIP. Yeah. Which has also enabled us to, it was just to accelerate our growth. Otherwise, we are comfortable with what free cash we are generating and what we had to go up to FY30.
Right.
So now to accelerate, this has also helped us. So that will not be a constraint with our strong balance sheet. Because
right.
industry, if you see the sector operates at a debt equity, maybe a 5.5 is a very comfortable number.
Sure.
Presently, if you see at the end of the H1, our debt to equity is at a rate at 4.1.
Right.
But and if I remove the work in progress, which will start giving me the cash once the capacity gets commissioned,
right.
If I take the net debt to EBITDA, removing work in progress debt, then it is only at 2.2.
Right, much lower, yes.
Much lower. So this gives us a lot of cushion and headroom to accelerate our growth. Right. So, and beyond 20 gigawatt, as we said, that will be happening significantly earlier. Yeah. We will be continuing to take part in the country's growth. Right. And that is not the place where, at the time where we will like to slow down or stop.
All right, there you have it, the management of JSW Energy telling us about how things could potentially pan out over the course of the next 3 years. Strong demand is envisaged. Well, at least as far as the ratings of the company concerned, it's certainly a good one based on its past performance and what the street is making of it. But on that note, it's a wrap on this edition of, well, Know Your Company. Lots more lined up on the other side. Stay tuned to NDTV Profit.